What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful in the comment section of the YouTube videos, and please be careful on Instagram, where people are impersonating me, slide into your DMs, trying to get you to send them money to invest for you. Again, guys, I don't invest money for my subscribers, so on both platforms, please be careful. If you want up to 12 free stocks, Webull, it's gonna give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that brokerage account, they're gonna give you up to 12 free stocks. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of this video. Go click on that Webull link. Open up your new brokerage account today. Go get that free stock. Go get that free money. A week in the stock market. It was pretty doggone good, man. All three major indexes ended up in the green for the week, man. You got the NASDAQ over 12,000 points. You got the Dow over 33,000 points. And for our first time in a long time, you got the S&P 500 over 4,200 points, man. And we still have 5% inflation. We still have short-term interest rates, AKA Fed funds rate, at 5%. So what in the heck is driving this success of the stock market? Again, like I've always told you guys, you got billionaire hedge funds. You have institutional investors. These people are about making money, guys. And at some point in 2023, they had to get back in the market. Although you can go out and find yourself a U.S. Treasury at around 5% yield and play it safe. These billionaire hedge fund owners, these institutional investors who is investing, billions, if not trillions of dollars for their clients, guess what? Playing it safe is not going to give their clients the kind of return that they need. So at some point, you got to get back in the market. You got to take a chance. And that's what I believe is happening right now. These big boy investors are saying, we can't stay on the sideline any longer, so we got to get back in, and that's what's happening. Now, again, in yesterday's video, I mentioned AI, artificial intelligence. I think that's a big part of it because that's starting to happen again, right? People are starting to talk about artificial intelligence technology, and that's the buzz right now, right? And y'all know how we are in our society here in the United States and probably around the world. When you get a buzz started about something, guess what happens? Nobody wants to miss out. Nobody want to be on the tail end of this thing. Everybody want to be on the front end of it. So guess what? That's what's happening right now. I think you got a lot of money starting to move around AI technology, whether it be existing companies, right, trying to develop their AI technology to either, help with efficiencies within their own companies, or maybe they're trying to develop that AI intelligence and they're trying to sell it to another company, right? All of those things are at play. Also, what's at play is startup companies. Whether it be on the software end or the hardware end, you got all these startup companies trying to create AI technology or support AI technology. Now, I mentioned the video yesterday, and I did get a couple comments about PE ratios for NVIDIA and all this other stuff. Guys, I'm no expert at picking individual stocks. So when you're dropping comments, hopefully they're not directed at me about PE ratios and all this other stuff. I'm not looking for all of that. All I'm looking for is, how do I find ETFs and index funds that all that PE ratio work has already been done for me? I don't have time to be sitting down trying to go through some company's financial information to calculate their PE ratio. I'm not looking to do that, right? But if you are, have at it. Not my thing. I just rather go find me an ETF, like I mentioned yesterday, that has the top 30 to 40 information technology companies in it. And for me, it's Vanguard Information Technology, VGT. There's others out there. So go do some homework. If you like the tech industry, my recommendation, don't sit out there and try and pick individual companies. Now, you can if you want. If you feel comfortable with that, do it. I don't feel comfortable with that. So I'm just going to go find me a big boy ETF that has the top 30 or 40 information technology companies in it, and I'm going to go about my business. This stock market is something else, boy. I'm telling you. I'm thinking, shoot, are we getting ready to hit this run? I don't know, man. I don't know. We'll see. I think, the Fed's going to meet in the middle of June. I believe 14th and 15th, the Fed is meeting. Don't quote me on that. You guys go out and fact check that. But I think that's when they're meeting. And then the May CPI report is going to be coming out June 13th. Of course, we'll get some jobs reports prior to that June 14, 15 meeting for the Fed. So they got some data they're going to be looking at to determine if they're going to increase these short-term interest rates. At this point, I don't believe the market is worried about that. I think the market has already said, let's price in them giving us one more rate hike. The thing that's worrying everybody is, not everybody, it's really worrying the actual Fed, is that they've done these 10 rate hikes and the economy is still growing, right? As I mentioned in yesterday's video, when you look at Q1 2023 GDP numbers, the market expected a year-over-year increase of about 1.1%. It actually came in at 1.3%. So that tells the Fed that, maybe there's more work that needs to be done. Maybe there's more rate hikes that need to be done in order to, slow down this growth in our economy. And I know that sounds weird because you're thinking, don't we want our economy to grow? We do, but we want it to be healthy growth. When you got inflation over 5%, when really inflation should be at 2% to have price stability in our economy, you really don't want the economy to continue growing when you got inflation at 5%, because again, lower income, middle income folks are not going to be able to afford the basic things they need to live with the economy growing and inflation growing. They don't go hand in hand, guys. So that's what the Fed is looking at. Their main concern right now is with the economy and price stability in the economy, so that everybody can afford the basic things we need in order to live. And right now, that's tough with 5% inflation. Obviously, people are slowed down borrowing money, which is what they want to happen when they increase short-term interest rates, right? When money is too expensive to borrow, people don't borrow, right? But when money is too expensive to borrow, companies don't borrow. And if companies don't borrow, here's the thought process. If companies don't borrow, they can't hire people. They can't expand. But that's not necessarily true in all industries. Apparently it's not. You still got a hot labor market that I believe in the month of April, I believe it added 235,000 jobs, something in that neighborhood. Number could be slightly off, but it's somewhere in that neighborhood. So you still got a red hot labor market, despite the fact that money is not cheap anymore. It's pretty expensive to borrow. So something's driving that. Now, I know earlier in the year, it was, travel and leisure. The service industry was really driving those gains in the labor market. Right now, it may shift to AI, because again, these companies, they're going to be hiring engineers and people like that to, fine tune their AI technology. So we'll see, man. We'll see what's happening. But right now, man, I'm doing great. The portfolio is looking good because why? The stock market's up. And y'all know probably 70% of my net worth is in the stock market. But I'm not worried, because you guys know I've been investing for over 22 years in the market. So I've dollar cost average in, guys, over 22 years, so I'm good. Well, guys, I'm out here on a beautiful Saturday morning, just getting this exercise in, enjoying this beautiful Florida sunshine, breathing in this fresh air, man. It is just so good for the body, right? It wakes me up. It's my solitude time. It's my time to get out and talk to you guys through this video, as well as just recap my week. Think about what went well, what didn't go well. Think about what I'm gonna do different next week. So even a guy like me, man, who's been doing this for 25 years, guys, I still have, planning sessions. And out here in the mornings when I get out and walk, that's my planning session, whether it be for the day, or whether it be for the next week, or whether it be for the next month, or the next year. It's right here, man. See, financial freedom starts here, right up here between the two ears. You got to get yourself together here in order to get yourself together in your pocket, because that behavior with money at $1 is going to be the same behavior with money you have with $100,000. So you got to start here, get this right. And then when you start making this money, man, you'll know how to manage it. You'll know how to invest it, and you'll know how to multiply it. And again, it ain't something you got to be out there being fancy with. You just got to live on less than what you make. Take difference, invest it. If you're brand new, start with an S&P 500 ETF. That's my recommendation. It's simple. Top 500 companies in America. You guys know I love the S&P 500 ETFs that track the S&P 500 index. 500 of the top companies in America are in that fund. How can you go wrong with that? I've been at this thing for 22 years and I still invest in VOO from Vanguard. So, hey man, give it a shot. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.